And we're back. Rush to Reason, Denver's Afternoon Rush, KLZ560. Thanks for joining us today. David Stryzewski joining us now, Sound Planning Group. David, how are you, sir?
Hey, doing fantastic. Great to be with you, John.
Happy Tax Day.
Yes, indeed. It is a happy day.
Sorry, I had to throw that out. You have to kind of remind yourself that today is the day we all pay. Well, everybody's partially been paying typically throughout the year out of their paychecks and so on, depending upon how they do things. And somebody asked me earlier, what are we really paying for? And David, there's one simple answer. Literally right now, all the taxpayers, all of them combined, are doing is paying interest on the debt. Am I wrong?
You are not wrong. As far as the taxpayer goes right now, I think it's also very important to understand that we're at a time when tax brackets are likely much lower than where they will need to be given all of this deficit spending that you were just noting there.
Correct.
I mean, we just got this new statistic that every 100 days right now, we have to print an additional $1 trillion. In other words, we defaulted on our budget by $1 trillion every 100 days. This is a runaway train that will have to be dealt with at some point in time.
Yep.
The only way that Uncle Sam raises money there is through taxation. And so buckle up.
Well, and then we've got the Fed, basically saying that, the economy is doing better than we expected. Inflation is still up. We want to see it come down. Well, David, you're not going to get inflation down when every 100 days you're printing $1 trillion. The math doesn't work.
No, it doesn't. And in fact, I love that you just kind of took it here, because one of the things that we're looking at right now is that, we've seen gold, just hit these record numbers right now. And so I think that gold is a measurement of inflation. And so if you think about it, we were at like $2,000 gold here just about 6 months ago.
Right.
And so if you think of that as a ratio, it's 1 ounce of gold for $2,000 US.
Right.
Well, today it takes $2,400 US to buy that very same ounce of gold. That's the same in China as it is in the United States, as it is in Africa. And so the point is that, is inflation still happening? Absolutely. We're printing money. That is literally the cause of inflation. There's no other math around that. And we are literally inflating ourselves up right now relative to gold, which
right.
I think is real money. And that's an important factor for people to be paying attention to.
I read an article just yesterday about the fact that you can now buy gold bars, an ounce of gold, at Costco, of all places, David.
My favorite store.
Go figure. And from what I'm understanding, the spot price with them is usually $5 to $10 less than it would be anywhere else. And that's why they're selling I think they sold, don't quote me on this, but I thought I read they sold $100 million last year in gold.
It's unbelievable. I mean, when Costco got into the wine business, they became the number one wine broker in the world. And they surpassed all these expectations.
Unreal. People are going to buy, chips and salsa and gold.
Yeah, I wonder, are you actually grabbing those ounces of gold when you're walking out the door?
Well, the article I read basically said that they were, this particular couple they interviewed that had bought one. They were down there, doing their grocery shopping, whatever else. They're looking around. They come across this gold. It was at that point, it was $2,000 for an ounce. Back to your example a moment ago, it was about $9 less that day than what they looked on their phone. It was $9 less than what the spot price was. So they went ahead and picked up a bar.
Unbelievable.
Go figure.
I mean. Yeah, exactly. So that's the Kirkland signature way there.
You can't knock their ways.
No, I mean, I live in Kirkland, Washington, so this is literally the hometown company.
Oh,
so
yeah, you would know.
Funny.
Absolutely.
Uh-huh.
All right. Well, hey, along those lines, let's talk about it. Last time you and I were you were on with me. We talked about Bitcoin. I've watched it steadily increase. Where are your thoughts there?
Okay, so we're getting into the halving this weekend, John. And so this is very important to be paying attention to.
Okay.
It happens every 4 years. And so basically they can produce half as much Bitcoins as they did previously.
Okay.
And so right now we're doing about one every 10 minutes. It's going to take about 20 minutes. So we're going to be doing about 450 daily.
Okay.
And so what does that mean? Supply and demand. Right now, the buyers want to buy more than the sellers want to sell. That's why the price goes up. But we're going to find ourselves in a time where these buyers want to buy, and at the same pace, but there's less than half as much as before. And so what's going to happen with the price? anyone can figure this out, the price is going to go through the roof. And so especially as we're looking at inflation going on, I mean, it's an easy argument. Hey, look, gold went up because of inflation. Well, so did Bitcoin. But there's also the supply and demand factor, and Bitcoin is finite. There's probably a lot more gold than there is Bitcoin, at least known. And so is Bitcoin the answer to all life's problems? No, it is not. But each individual Bitcoin breaks down to much more smaller parts, 100 million individual pieces. So it is divisible. You could do some trading with it. And so we've yet to see what ultimately that system's going to look like. So anything with Bitcoin, with gold, et cetera, it is speculation. However, I think that we can triangulate a lot of speculation to be a more confident assumption of the future because we see things like deficit spending. We see things like wars that are breaking out right now. I mean, we need to pray for the Middle East right now.
You agree?
You know, we could go viral here, and this becomes WW3, and China moves on Taiwan. So, you know, we're in a very weird spot right now, and even the banks are beginning to have challenges. And so that's also part of the reason why.
Well, and again, so this goes back to, thank you, kind of really segueing into where I wanted to go next, which is the whole Fed policy, what they're looking at, the fact now that it might be fall before they make any moves. And I said this to our mortgage guy a moment ago, David, right before you, I really feel like the Fed is doing exactly this time what they did last time in relation to last time they waited far too long to raise rates. And in my opinion, they're waiting far too long to lower them this time.
And so that is why I'm calling this the Federal Reserve bubble.
Yep.
We need to name the bubble, this crisis, this recession that we're about to find. The cause of it should be the name of it. It's the Federal Reserve bubble.
That's right.
Late to the party, and you know, here they try to spike the ball, you know, after Christmas, saying, "Oh, hey, look, we got inflation under control. We'll be at 2% real soon." Hey, look at about 6 rate cuts this next year. What did the market do? Rallied hard. Then we got these headline numbers on unemployment, which, by the way, were revised down by 1/3.
Yep.
So those numbers that everyone's like, "Oh, this is so great, man."
They weren't that great after all.
Quarter. No, we're way more fragile than we think that we are.
Agree.
And I think that
okay. So dumb question on my part. Why can't you and I can see this? I'm a guy without a college education, by the way, and I can see this. Why can't these PhD economists understand this?
Man, you know, it's so hard, right? So there's these different theories of that people ascribe to, and so a Keynesian economist is someone who believes that you can just print and print and print. And that, you know, it's going to work out. And people will always be rational, and they're not going to actually think about it. They're just going to think, hey, look, I can still buy eggs and butter and milk. Everything's still good in life, and I'm just going to keep going on. I don't think that the world's like that. And so many people just have their heads in the sand. Additionally, statistics can lie. And so, you know, if I look at unemployment numbers, man, I could make a great story out of it. Or I could look a little bit deeper and I can tell you it's not actually as clean as you think it is. And a lot of those unemployed or people getting employed are getting part-time jobs. So
and by the way, David, and everything you just said, I fully agree with. In fact, what they're getting is maybe not even one part-time job, but two part-time jobs, because that's what they need to actually make ends meet. So, yeah, while the numbers may look great statistically speaking, fundamentally in what money they have to spend is not.
That's exactly right. Yeah.
And again, I don't understand why. I guess it's because, you know, at least in my world, and you're the same way. I live on Main Street. You know, I coach on Main Street. I still talk to business owners on Main Street and their employees and so on. And I see all of this. And no offense, David, but the Fed is far removed from that. They don't live on Main Street.
No question. They're so far removed from Main Street, it's ridiculous. Even walking around and saying, hey, you know, inflation's at, 3%. It's like they're trying to deceive us to say that it's only at 3% now. Well, here's the deal. It's risen.
It's about 20, actually.
Yeah, it's up 24 point something.
There you go.
Look at trueflation.com.
Correct.
Is who I like to use. But when you look at these rates that have risen like this, we look at the condition that our banking system's in. We look at how the consumers at record high debt right now, at record high interest rates on these credit cards. We look at those unemployment considerations that we're talking about right now. This is not a good moment for America. 70% of our economy is that consumer that is debt-ridden and is paycheck to paycheck, and they're in trouble. We're not getting cheaper prices anytime soon. In fact, inflation's going up. And if you don't think so, we're not even at war right now, and we're at deficit spending extra trillion every 100 days.
Okay, so we talked about gold a moment ago, and yes, that's one way to hedge against some of what we're talking about. For the other people that are out there listening, they're trying to figure out, great, you guys sound like doom and gloom, which we're not. There's always a silver lining, and we've always seen, David, people have the ability to do well in down times. Outside of gold, what else do they look at doing to hedge against this?
Great question. So when we look at portfolio theory, it's typically broken up between risk assets and protected assets. The big issue right now that I'm telling you, and I'm one of very few people that's actually going to sound this alarm, bonds can lose money in 5 different ways. One of the reasons why we would hold bonds is that they're supposed to not move in the same direction as stocks. Well, for the last 3 years, that whole theory's out the window. It's not acting normal right now. And so they're not the same hedge that they were before. Bonds, I think, are about to have significant challenges. And so people need to be looking into alternatives. They need to be able to hedge their portfolios. They do need to understand as well that as far as equities go, the equities that led us here, which is, real strong tech stocks, et cetera, will they do okay in the future? Maybe. Are they going to have some corrections? For sure. What will ultimately be the leaders in the future? Likely not the same things that got us here. And I say that really cautiously. We need to be a lot more rifled in our approach. We need to be very specific. I don't want to buy an index that's going to have a bunch of failing things in it and some things that do okay. I would rather allocate to the places that are going to do better and not have as much of the negative stuff. And so index investing right now is likely not a great strategy. But you can do it really low cost. And you know what? The market always goes up over time. And if I just wait, hey, that's perfect. You have to understand, though, if you're a baby boomer entering retirement today, this is one of the moments that people should fear the most. And the reason why is because as we enter into a recession here over the next 10 years, that is mathematically the worst time for this to occur for you. We call this the red zone of retirement. And that's where you've got to be able to put points on the board and stop points from getting scored against you. So again, John, my advice is going to be that they need to sit down with somebody and they need to look at alternatives to protected assets that are hedging strategies. They need to look at equity strategies and why these versus that. I'm going to say miners are going to be a really big part of that, given the fact that they've lagged for 2 decades in the metals that they hold in those mines, just as the asset, plus they produce something, are going to produce a tremendous amount. But here's the point. How does somebody go forward into the future when everything's changing at once? And perhaps, these ideas, even like oil, which is another great idea, where do you do it? How do you do it as things continue to change? And so this is why it's really important to sit down with a good advisor that can tell you how to be able to invest that money. But I'm going to actually note one last thing here. It's more important to figure out how to pull it out, paying the least amount in taxation. And that is an expertise that is your financial advisor better have if they're providing you actual retirement advice.
David, how do folks learn more about you and, of course, your new website that you've got out talking about the Fed?
Yeah. Hey, so fedbubble.com is probably the best way to just get to know us here. I've got a new book that's going to be coming out and called Riding Bulls and Taming Bears. But we've got a lot of great information on there for people to be able to look into, get second opinions about, et cetera. And so, we don't want to just be all doom and gloom. There are silver lining answers. You just need to really look a little bit deeper because things are shifting and changing right now in a way that they've not in a long time.
Absolutely. David, as always, appreciate you very much, sir. Have a great evening.
Thank you, John.
You betcha, David. Appreciate it very much. Again, David Stryzewski, Sound Planning Group. Now, when it comes to locally and